Hello and welcome to this evening's market breakdown. So, if you look up on the screen, you can see it's 3:04 a.m. and I'm still awake. So, I decided I just had to get myself up and make the video for the funded program. So the reason why I've not really made a video, I did not really make a video for the funded program is because, again, I was stressed out trying to bring up schedule for the entire organization, and that's done now, so I can relax easy knowing that all the schedules fit and we're good to go. So that was the basically the reason for the delay in the schedule, sorry, in the release of the video. That's a secondary reason. The primary reason is the fact that I received 4 DMs on my Instagram. Again, I'm just kind of person whereby it's very difficult. Once my DMs gets flooded, it's very difficult to reply to a lot of people. There's so many people who've texted me reached out to me on my Instagram, and I've not replied to them. But the few I've actually looked at, they send me screenshots of access to our content, and I'm wondering how they're getting access to our content, knowing they're not on our team. Yeah, again, it seems like someone's looking our stuff out, just two things. Just someone looking our stuff out to people, and then just others who are actually selling the videos to people, which is bad. And that totally discouraged me. And you guys are suggesting I use Kasabi is something unknown name. I'll try that. I'll see how that goes. If there's a way I can upload videos without people not being able to download the videos, would make a lot of sense. Or if I could upload videos and I'll be able to track people who watch the video. So the other uh, solution to the problem was to do live sessions, but then live session will become stressful because videos just gives me convenience to do them on my own schedule. So, anyways, today's session we're gonna be going over intraday analysis. If you look at our analysis throughout this week, we've been 100% spot on. 100%. Uh, Today I talked about the cells. If you're on the live session about the cells, I said I wanted to see a cell off of this uh reclaimed order block. What I was using actually was the body of the candle. That was a mistake. Yeah. So and I intentionally did it that way because I did not feel like that price was going to get to that level. Because John was bullish in GBH dollar, and obviously if it's bullish, and I said, "Oh, let's take a sell," that would just lead to a lot of confusion. That was why I just like, okay, let me leave the level here. But I was more interested in USDCAD, which we unfortunately missed. But you got the bias. I gave the bias already. So if you saw this retracement using my bias, you should have been going long. Now the thing is, I'm just kind of person whereby I would not encourage over trading for you. And this is for a lot of you guys. You come on my sessions, but you don't really know what it entails as an educator to give out trades and stuff like that. So we've been massively profitable this week. But then I feel like if I'm calling out trades for you guys, it might lead to over trading. Just like just this one week where we had a very excellent week, and then on Friday we took two trades where it said, "Oh, reduce your risk because it's Friday." People took a loss on that trade, and the blame was on me. I'm like, bro, you know. So I try to avoid. Ever since then, I'm like, okay, I'll try to avoid that because you guys have like 5 wins. It's all good because you have 5 wins. Then there's a sixth trade coming up. You want to over leverage on that trade because you've had 5 wins, and then you take a loss on that trade, and then the blame goes to me. That was what happened literally like 5 weeks ago. So that was why I rather preferred. I rather stuck to giving biases on this session rather than specific entry levels for trade. Because I knew if I'm like, oh, we want to buy off of this auto block, that everyone would be expecting me to send out a trade and steady and on the Discord and stuff like that. So there was no point. Yeah. So going back into the lesson, I wanted to talk about intraday flows. Okay, and this is where you have your notes. Usually, when I do my sessions like this, in the past I used to bring my notes out and teach you from my notes. But I've gone through my notes like hundreds of times, so I already know everything like the back of my hand. So this is where you want to bring up your notes and you want to learn something because there's something you're gonna learn definitely today. Okay, so the first thing you need to understand is price moves on a fundamental basis. Price is driven long term on a fundamental basis. So we're going to do the thing I've been avoiding for a long time, and we're going to actually look at fundamentals. Just sorry. In the past I used to teach fundamentals a lot. For those of you guys that know me, in the past I was the only guy you saw teach uh open interest and uh premium on the futures contracts and contract spreads and what's it called, commercial support and all of that stuff and short-term hedging program and all of that many stuff. Many of my content that's been out there for a long time. I get a bunch of people send me videos that I've done like 2 years ago. It's insane. So it's also insane to watch the progress and understand the price action. Anyways, let's quickly go over Canadian dollar. Let's talk about this real quick. I just ran through my glass of water, and I'm so thirsty. Yeah, so I had a banging workout 12 a.m. Just go check my what did you add? Oh, gotta log in stuff. I had a banging workout 12 a.m. So mouth is dry, insanely dry. Let's watch USDCAD. You can see obviously in USDCAD there's been very clean lows here in USDCAD. I do not know why. Let's see if there's a way we can bring this up. There's a weekly nearby. I'm trying to bring up commit trade report because sometimes it misbehaves. We're only gonna go with the commercials. We don't really need this, so I just make them white. I make the colors white. Uh, we can use daily nearby. We can go back to daily nearby. All right, so you can see we were obviously in the trending market environment on Canadian dollar. Equal lows, the market is running higher and higher and higher on the Canadian dollar. Now look at the currency pair. This is USD CAD. Okay, and this is a Canadian futures dollar, futures contract. So if we're looking for bearish prices on the Canadian futures contract, that means a weaker Canadian dollar. That means we can expect a bullish USD CAD because again Canadian dollar is the currency and the base currency is US dollar. Okay, so now using our fundamental analysis, you can see inside of this range at a resistance level. Remember when I taught you guys about open interest? If we see open interest with a sharp increase at a resistance level, let's do a 5-year price range. Okay, where's this resistance level? Here, old high. We've run above a whole old high, right? And whilst we're doing so, you're seeing the open interest rapidly increase. Excuse me. Okay, there's a very sharp increase in open interest as we run above the short term high. Not short term high, a long term high, because this is a 5-year time period. Who's gonna have your subs above this long term high? Obviously, gonna be institutions. Okay, so institutional money, institutional funds, they have pending liquidity above the short term high. Okay, so as we are approaching that short term high, we're running the liquidity massively. But now, watch what happens. Okay, this is where you really want to focus your attention. So we'll go back to that short term high. We'll put our uh, horizontal line there. So we have that delineated. That's perfect. We can go back to the 1 year time period. We can go back to the daily time frame. So now watch how we run through the short term high initially, then we start to consolidate at that level. We've run out liquidity, now we're consolidating at the level. Okay. Whilst we're doing so, boom, open interest increases rapidly. Okay, at a in a range at a resistance level. If you guys go through the open interest video I did, remember I talked about the specific characteristic in price action. Whilst that is happening, you're seeing the open interest was decreasing as open interest was rallying to that support level. We were increasing net shorts. Okay, this is the zero net business line of the cumulative trade support. Anything below shows an increase in net short. So we were increasing net short whilst we were rallying at the same time. Open interest was increasing. All the catalysts for a bearish market. And then you see the market start to unfold. We start to unfold, distribute net short positions. Here we're accumulating net short positions. Now we're starting to distribute net short positions in the marketplace. And that was why I said, going back, if you guys remembered on the daily time frame, when we're still trading inside this range, I said this is going to be the trend liquidity. We're gonna look for price to reach for these highs. Okay, and that's exactly what's happening. Okay, we're seeing price from this level. Watch how we know the level, which is surprising. It's fantastic. Okay, so not only are you getting access to all the trades and everything, you also get access to the knowledge and the skill set on how to do this. So the what you've done, or what I just did right now. Again, I made a very specific point of not talking about this on any of our videos, and I was saving it for you guys. So this is how you use this to tie to your analysis. Now, what you've just done with this analysis, if you've created or you've given yourself a range of opportunity. Now, what I was doing was I was building a bias from a macro standpoint, because once we can know where price is going on a longer term basis, it becomes easier to frame all the intra-week setups and the intraday setups. That's why it's been very easy to nail USDCAD. Okay, so now going back into let's see if I can find going back into let's see, open with Google Chrome. All right, so we've arrived from the Canadian dollar futures contract that we are anticipating very weak Canadian dollar. Now, looking at US dollar from a seasonal perspective standpoint, you can see in the month of July, okay, in the month of June, sorry, not July. This was the month of June whilst we were still at this level. So that was June going into July on US dollar. June going to July. You can see the tendency of the US dollar to rally. Right, this is June. This is the 5 year signal tendency from June going to July. Mid July, there was a very rapid rally in price. You can see also in the 15 year pattern, it was less rapid, and on the 33 year pattern, it was less rapid. There's a signal tendency for us to make an eye around early mid July, but I want you to watch that very sharp incline on the US dollar between June to mid July. So we've identified a range of opportunity from uh, June, okay, from early June on USDCAD that just very massive tendency for this to be bearish based on fundamentals, and also use the fundamentals on DXY. There's a very massive tendency for US dollar to be bullish. So now, if you pair a very weak futures contract with a very strong futures contract, okay, if we've arrived from signal tendency that US dollar is going to be very strong, bullish, and Canadian dollar is going to be very dovish or bearish, okay, pair them together. That's US dollar, Canadian dollar. You already have a direction in price already. So the market is going to be very explosive in one direction. That's the upside. And that was why I came back. And if you guys remember when we're going through this, I said profile your market. What is the market condition right now? And a bunch of you guys were seeing consolidation, reverse, and I told you no, it was a trending market environment because now you've seen the willingness in price to want to trade to the upside from a range. Okay, we've shown no willingness to want to trade to the upside from a range. We have a market maker cycle right here. You have your initial consolidation, lower sell, accumulation, reaccumulation, reversal, low risk buy. I talked about low risk buy. I was talking about this reaccumulation here, and then to run the liquidity, and that's your market maker cycle being played out. So we already figured out this was a low being formed on the cycle, and we wanted to run out the liquidity. So this is the thing about institutional trading. Once you identify your premise, and again, your premise is going to be from the standpoint of your seasonal tendency, your current support, your open interest, your interest rates. Okay, once you've identified your premise on price action trading, then it becomes easier for you to get in sync with the technical side of the marketplace, and this is where it really becomes very easy for you to align yourself with the marketplace. Now, going into the market structure on USDCAD, obviously, when I'm on steady, again, I've told you guys before, I'm going to use different terms, and I'm not really going to teach a lot of the things I teach you guys on here because, again, number one, I respect ICT so much, and it's going to be unfair of me giving out is knowledge to the general public, which is why I'm okay with this. As First Capital starts to grow, I will I will start to reduce the amount of information I give. Because I'm not supposed to give out those. There's a lot of things I could talk about, but I prefer rather not talk about those things. Number one, you guys would not necessarily understand because you guys need to get to that level. But again, just some trades you guys see me do on my Instagram story that I don't really send to you guys. It just generates unnecessary questions from you people, and I don't want to have to deal with that. So now looking at USD why was I okay with calling buys in USD today? Now, if you go back to we understand already that the pull on USD is going to be to the upside. Okay, because the pull on the macro time frame obviously is bullish. Right? We did the futures contract analysis, we did the signal tendencies analysis. So what we're looking for discount array runs. Let me real shift this to the far time frame real quick. I'm going to get rid of the session break, so we are good in the market structure. Huh. Perfect. So now what we're looking for is discount array entry levels. Once you've identified a bullish market profile, you're looking for basically discount array entry levels to primary exit levels. Now we have a range in form of this high. Uh, I'm not sure if we cut the sells last week. I think we did. Oh no, I forget. So we have a short term high in the marketplace, and initially on Monday on Tuesday I wanted us to sell to run out the lows, and we checking out the sells. I still feel that was a good decision because we're trading against institutional order flow. But again, yeah, it was so clear that price wanted to get into this level. I was looking at the Williamson price to want to drop down to 1 hour fair value gap. But then again, we have to take into consideration the fact that we have a 4 hour break block here, and we ran out the lows into that breaker block and then expanded to the upside. Again, that was all we needed for the buys. If you pull up your Fibonacci and want to pull from range to range, high to high, you can see it comes at the 50% of your range. That is your 50%. But I will do more of where do we really shift markets, right? So we have a low, lower high, lower low, higher high. There's a break here. Okay, so where do you have a shift in institutional order flow? Question. Use the bodies of the candles. I know I'm going to get a bunch of questions. I shouldn't have done this on a live call. Okay, so we shift institutional order flow to the upside in this last down candle. Okay, so in this last bullish order block, that is where we change from a bearish set of delivery to a bullish set of delivery in this bearish order block. So if you're using your Fibonacci from this low to the side, it might seem like it does not, it never gets to a discount price point. But if you utilize what IPD is going to reference in the form of we're shifting our state of delivery of price from a bearish short-term bearish to in sync with the longer term bearish trend, market trend here at this other block, you can then clearly see that it comes in at a premium level. But even without that, all you're looking for, because there would absolutely have been no chance for you to get on the straight because it was just so fast. It would have been too fast for you to do any executions on getting in sync with the trade and trying to run the short term line. And that was why you would have looked to get in sync with the trade setup today. So what I intentionally did not mention on the call today was the fact that we had a run lower into this equal lows. And prior to that run lower, we had a two last up candles. That is your breaker block. Okay, so this is your breaker block. You don't necessarily want to see price straight all the way back down and say, oh, just inefficiency to the downside. No, it does not make sense. All right, you don't want to see price straight all the way back down, especially as we just cleared out liquidity. Because a bunch of you guys will see something like this, and you'd be like, oh, I want to see price straight all the way back down. We have a small fair value gap here and here, blah blah. Price does not really need to do with that because all of this has been sell side liquidity offered. So you need to look at this as a refill of that sell side liquidity offered. Okay, so what you're gonna reference instead is gonna be that uh, break a block on the 1 hour time frame, and that was why you saw my live session initially. I wanted to turn out that trade. But I hesitated because I wanted to wait until the live session, and that was painful. But I give the buyers already we're looking for, and I told you guys we're gonna see a definite run on this short tomorrow, and that was exactly what happened. Framing from this, so what I simply did was I did the same thing from the 1 hour time frame to the 15-minute time frame, and the fact that we have a low, price goes up, we have a failure swing again, low resistance liquidity run. That's why I was so confident that we're gonna run highs today. We have a lower low in price, and then we start to break higher. This becomes a breaker block. Okay, so now we have a range, 15-minute breaker block. That's the range of the 15-minute breaker block. Just like we had a 1 hour breaker block going back into this. There's a 1 hour breaker block here, and then we're using the PD arrays inside the 1 hour breaker block to frame our setups. All right, let's go down to the 15-minute time frame. We're using the PD arrays and the 1 hour breaker block to frame our setups, and that's basically the same thing on that I did on USDCAD off of this entry level. So we have a breaker block. Is there any other PD array inside of that breaker block that we can reference for buys rather than trying to buy the breaker block? Yeah. So if you go on the 5-minute time frame, you can see that we have this last down candle prior to an expansion that has an inefficiency above this. Remember what I teach about probability auto blocks, right? Excuse me. Hyperbole auto blocks are the ones with gaps around them that makes them really hyperbole auto blocks. So on the 5-minute time frame, you can see that if that's not really clear, then you can go on the 15-minute time frame and it becomes more clear to you the fair value gap on this candle. Okay, so I was not trying to buy at the gap because there was an auto block that started the gap. And what I teach you guys is whenever there's an auto block that starts the gap, you reference auto block instead of the gap itself. So in this situation, you're not trying to use your institutional order flow entry drill. So because typically, if you want to use your institutional order flow entry drill, let me remove this because it's getting really nasty. You already know I'm talking about the gap already. You already know all of this. So if you're going to use an institutional order flow entry drill, it will tell you to buy here. It will say you want to buy as price is touching the low. Now you only do that. This is where you want to take notes. You only utilize institutional order flow entry drill when when it's not an auto block that starts or ends the fair value gap. In this scenario, you have an auto block that starts the fair value gap. So when price is drawn back into that fair value gap, oftentimes price will seek the auto block and not just the fair value gap. This is light bulbs. You should be going crazy about this information I just gave you. You should be going crazy about this information I just gave you because this stuff is deep and it took me a while to figure it out. You might not really appreciate it because until you start making money from it, and that's usual. So eventually, you're going to learn to love it and learn to appreciate the information. Okay, so let's use an example. I think I did one the last time. Yeah, so you can see we have a breaker block on the 5 minute time frame. Obviously, we have a low here. We have a low. Price runs through the short term low. We have a thrust up. Price expand out of this series last series of down candle. This is a breaker block. We expand through that breaker block. Okay. Now we have an inefficiency between this kind of 6 low initially and this kind of 6 high. All right. Now, because the gap that starts, the candle that starts the fair value gap, it's not an auto block. We use the institutional auto flow entry drill. So as price leaves there, it starts to come back. Boom. At this point, we're buying reaction. As we buy a reaction. Now price trades back into the auto block. Let's go. Trades a little bit deeper into the auto block again. That's still cool. We have a little bit of an expansion to the upside. Boom. We have a little bit of a gap between this kind of 6 low to this kind of 6 high. Now the question: does an auto block start the fair value gap? No, the auto block does not start the fair value gap. So what's going to be our entry style institutional flow entry drill? As price touches the bottom, we're entering at that low, and you see expansion. Okay, but if it was an auto block that started the fair value gap, for example, I'm trying to look for. Let's see if we can get one example where another block created a gap. So you see exactly what I'm talking about. You see how powerful what I'm teaching is. How literally insane this is. If it was an auto block that started the gap, you're not going to use an institutional auto flow entry drill. You're going to use an auto block for your entry drill. Okay. You do not use institutional. You only use institutional entry drill on fair value gaps when it is a fair value gap without an auto block. That means the auto block does not create the fair value gap. That's when you use a what's it called? That's when you use an institutional entry drill for your setups. Let me see if I can. I remember one perfect example on your dollar. Let's go check your dollar real quick. Because I framed the trade setup off of that. Pardon me if I cannot remember. It must have been a long time. So let's see. Okay, let's look at a very recent example. So we have one, two, boom, downside. and then the next candle comes up, and then we go all the way back down. We have a fair value gap between this candlestick low to this candlestick high. Now we fall just short of the order block by a few pips, by 1 pip. But again, you would have used the order block in this situation and not the institutional entry drill. If you're going to use institutional entry drill, it tells you you're going to buy this low end of the gap, and that's where you sell. And that's false. Again, what I'm teaching is should be blowing your minds right now. You should be going crazy because you just found information, and this is the benefit of being a part of us. You just found information. You're not gonna get anywhere, and that helps you figure out when to use an institutional influential drill, when to not use an institutional influential drill, and to use another block instead. Okay, let's find one again. Okay, you can see we have an auto block that starts a fair value gap. The gap starts between the low of the candlestick. I'll extend this out, and the high of this bearish auto block. And you can see you're not, because if you wanted to use institutional outflow entry drill, you're supposed to be buying at the low. And now imagine you're buying at the premium end of the fair value gap. You were getting drawdown of about 12 pips, unnecessary drawdown. But because I just taught you now that when you see situations like this, you use the auto block and not the fair value gap, you've saved yourself lots. You've saved yourself lots of drawdown by following the protocol I'm showing you right now. ICT does not talk about this. This is something you're going to get from me because I've spent nights. You're seeing right now is almost 4 a.m. I've spent nights like this for the last 3 years trying to learn the skill set. So you have to appreciate this. Okay, so going back into USDCAD. So for your intraday institutional flow practice, what I would like for you to practice is we've already framed, and this is an assignment for all of you guys who are going to watch the video. There's not going to be any edit because I don't think there's time for us to do any edit on the video. I would like you guys to practice. And what I would like to get you guys to practice on is I've framed this up for you in terms of the drawn liquidity is going to be this high on the daily time frame. So I want to see your entries. I want to see you guys try to get in sync. Even if you're doing on the demo account, you're doing on the live account. Excuse me, demo account, live account setting, you're all fine. But I want to see you frame your setting and try to get in sync with institutional order flow to possibly reach the target. Okay, I want to see your interest. Let's see. I want to see you guys trick USDCAD and see what you're able to do with the information you've been learning so far. So with that being said, guys, I'll wrap up the video here. Hopefully it was insightful to you guys all. I hope you enjoyed the video, and I'll see you all next time.